Top three things in my notebook. Number one, the euro. Number two, the price of oil. And number three, the 10-year bond yield itself. So first on the euro, you had last week was kind of the head fake move by Draghi. First, he didn't deliver the drugs. Then intraday, he had to come out and re-deliver the drugs. Now you got the euro down at 122, which is a fresh year-to-date closing low if we get it today. So again, there's a couple takeaways from that. Number one is deflation. Don't forget that when the euro and the yen are burning, what you end up getting is strong dollar. Now, a lot of people have confused strong dollar with a strong U.S. economy. That is, of course, not the truth. What you end up having is weaker currencies on the currency war front that perpetuates deflation. So again, euro down, yen down, you get obviously oil deflation because the dollar is going up. You get deflation expectations rising from a break-evens perspective and tips worldwide. Now, point number two is, in fact, oil. Now, oil has no support next to 62.21. 62.21. So again, 62.21. Is that three times I've said that now? 62.21 would be the closing year-to-date lows of the oil price. Now, again, if you run an energy company, I can assure you that you're not going to accelerate either CapEx or hiring on that. So again, a lot of people talking about how everything is just rosy in the world. If you're tied to the energy price, not so much. So again, bearish trade trend and tail risk remains in the oil price. We reiterate that this morning. And no, we don't like buying energy on said valuation because you're using the wrong oil price. Now finally, 10-year bond yield, no support to 2.16%. So again, the way that you really deal with bonds is that you buy them when they're down. Okay, so we buy them when they're pulling back and we sell them on rips. And again, we have not seen really an overbought signal on the 10-year bond yield until we get to 2.16%. So again, that's your risk range, 2.16% to 2.34%. That's the 10-year bond yield risk range. So that's your proxy for buying and selling bonds. And again, we love bonds. It's outperformed the Dow by more than 2 times for the year to date with much less volatility and certainly a lot less storytelling about the U.S. economy. So those are your top three things.